Hello, welcome to European Open briefing for Wednesday, December the 19th. I'm Raf Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar continues to decline on those expectations that the Fed at its meeting today will sound much more dovish, possibly signaling a slower pace of rate increases. Stocks, though, are steadier. We saw Wall Street yesterday closing in positive territory. We had a mixed session in Asia, but in Europe we're also seeing all major indices there open higher. The dollar index is currently still falling down to around 96.80. Dollar yen has slipped towards 112.35. European currencies, the euro and the pound, both up, extending their gains on the back of the weaker dollar. The riskier currencies, the Aussie and the Kiwi, also extending their gains, but the Canadian dollar continues to struggle. It's fallen to 1.5-year low amid falling oil prices. The oil prices fell sharply yesterday. We're seeing a bit of an upside correction this morning. WTI up by around 0.45%. But if you have a look at gold, it's currently trading at 5 months highs. It's crossed above $1,250 an ounce. So taking now a closer look at the dollar yen pair, we can see it's fallen to a 6-week low. Dollar index is at 1-week low. So the greenback is under pressure from falling treasury yields. The 10-year yield has fallen to near 7 months lows, dropping below 2.8% on expectations that the Fed will signal less rate hikes in 2019 from the current 3 that we saw at the last projections in September. The Fed decision is due at 19 hours GMT. There's also going to be a press conference by Fed Chair Jerome Powell at 19:30 GMT. There is a risk of that markets may have gotten carried away with their expectations of how dovish the Fed will be. If the Fed disappoints, then we could see the dollar pulling sharply higher. Let's now turn to euro and sterling, because both pairs have been benefiting from the slide in the US dollar. For the euro, it's trading very close to it's been hovering around the 1.14 level this morning. It got an additional boost on reports that Italy may have finally struck a deal with the European Commission on the 2019 budget deficit target, and this still needs there's been a technical agreement, still needs to be approved by the European Commission. That's likely to come later today, and we're already seeing Italian government bond yields falling sharply on those reports. Moving now on to sterling, we can see sterling continues to crawl upwards. It's currently trading around 1.2660. Although the UK government has said it's stepping up its preparations for a no-deal Brexit, there are still some hopes that the Theresa May's Brexit deal can get through Parliament. There's some reports suggesting that now she only needs 20 additional MPs to back her deal, and also that Theresa May could allow MPs to vote on alternative deals, which this actually could be good for her deal, as it would show that her deal is better than any alternatives being put on the table. In the meantime, though, we're going to have UK data coming up later today. The inflation numbers are due at 9:30 GMT. And a quick word about the Canadian dollar. We're also going to have Canadian inflation numbers later today at 13:30 GMT. So we've seen rate hike expectations by the Bank of Canada fall sharply in recent days following that slump in oil prices, as well as a more dovish Bank of Canada. If those inflation numbers later today are positive, we could see the loonie recover from the current 18-month lows. That's it from me. Thank you very much for watching, and have a great day.